Let's discuss the provisions and reserves related to Mudaraba. We should bear in mind that in Mudaraba, Islamic bank account holders bear higher risk. They share in profit or loss, rather fixed interest as in conventional banking. To provide more stable return to account holders, Islamic banks include provisions and reserves in their operations, which are allowed by the Accounting and Auditing Organization for Islamic Financial Institutions, or IOFI, and the Islamic Financial Standard Board, or IFSB of Malaysia. Central bank or other regulatory bodies usually encourage this. The common provisions set aside by Islamic banks are for doubtful accounts, permanent decline in the value of investments, and for contingent liabilities. There are also reserve funds. The purpose of the reserve fund is to smoothen account holders' income between high profit and low or no profit years, or the profit volatility. However, strict accounting rules need to be followed in allocating profit to the reserve funds and with the approval of account holders. Islamic banks and other Islamic financial institutions maintain two kinds of reserves. First, the profit equalization reserve. The allocation for this reserve is made before allocating any amount to the mudarib. The aim is to maintain the level of return for investment account holders. The second type of reserve is what we call the investment risk reserve. The allocation for this reserve is done after mudarib's share is allocated, and the aim is to protect investment account holders from future losses.